Good morning. Well, Aussie shares are shifting into reverse today, taking our leads from the US, where stocks on Wall Street put the brakes on amid disappointing corporate earnings from McDonald's and Travelers. Wall Street was also weighed down on the news that the UK Parliament rejected the idea of reviewing that 110-page Brexit legislation before the key October 31 deadline. So now it's over to the EU to grant an extension, and because of this looming uncertainty, the US major indices hit intraday lows. Disappointing corporate report cards also weighed on American equities, bearing in mind it's our busiest week for reporting season in the US, and earnings have been pleasantly surprising to the upside, but overnight it wasn't so good. McDonald's results missed analysts' expectations, with their profit disappointing the market for the first time in 2 years. McDonald's earnings per share missed the mark by 10 cents, and its same store sales, well, they did rise about 5%, but that also missed market expectations, which is why McDonald's shares fell to a 3-month low. On the other side, Travelers is the company. They're an insurer. They reported a big miss, with their profit of $1.43 per share, missing expectations by 90 cents. And this saw Travelers shares travel about 6% lower to a 3-month low. On the other side, going the other way, Procter & Gamble shares kicked up about 3% as their profit beat the street. Looking at a broader perspective, the S&P 500 ended 0.4% lower. The Nasdaq was down the least, about 0.1% to 26,788 points. Gold is holding steady at 1,490. The iron ore price has gained ground compared to yesterday, and the oil price has lifted by about 90 cents to $54 on reports that OPEC will deepen its production cuts, and so this should bode well for our local oil companies today. What else can we expect today? Well, Rio Tinto shares are on for a positive day, with buyers already mounting into the stock before even the market opened, with the mining heavyweight announcing a key review of their unprofitable stake in their 79% owned NZ aluminium smelter business. The review will consider options including closure and curtailment, which is action, and the review will be finalised early next year. Rio Tinto says it comes as high energy costs and the short to medium outlook for the aluminium industry remaining under pressure and unprofitable. That's why it's put this review front and centre. Rio Tinto is set to also meet with NZ government and energy providers to explore options and hopefully find a pathway to return to profitability. Looking at the bigger picture though, Rio Tinto has an above average asset size relative to their peers, and it's also one of few profitable miners right throughout the commodity cycle, as most revenue comes from the key areas of Australia, North America and Europe. Morningstar's quantitative valuation says the stock is undervalued, while Macquarie has a price target of $105. Yesterday it closed well under that, $89.80. Moving along now, what else to watch today? Well, Auckland International Airport reaffirmed their FY 2020 financial year profit guidance, and that should sit between 265 million and 275 million. It comes as they announce that as they hold their AGM today. Construction engineering company Service Stream also holds their AGM today. Contracting firm CIMIC will report third quarter results, so we can watch out for those. On the economic front, nothing out locally, but NZ will get their trade balance stats for September, but they're not expected to move our market.